is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with co-host Andrew Young, bright-eyed and bushy-tailed following his vacation, and just in time for what is going to be a pretty momentous week in crypto. Bitcoin jumped and crypto-related equities like Coinbase surged up as much as 14%, following a pretty momentous decision by a federal court that rejected a decision by the SEC to block Grayscale's request to launch a Bitcoin ETF. The decision was kind of a wholesale rejection of a lot of the arguments that were made in the matter. And it was kind of unusual that the court actually said that the agency was arbitrary and capricious in their dealing with Grayscale, which seemed like strong wording. I saw one analyst from Bloomberg say them's fighting words. But anyway, the decision clearly brings us one step closer to US spot Bitcoin ETF. And that, I think, is being viewed as a very welcoming bit of news for an industry that has, had its fair share of setbacks in the past little while. It's possible going into the fall that we not only reset expectations around the market, but also reset the conversation around crypto and Web3. And that's certainly something that we're really excited about. So with that, we're going to kick things off. Andrew, you have some initial sort of reactions to this. We're recording this, by the way, Tuesday at 1 p.m. So this news has broken. It's been, digested by a lot of smart people. We're just going through a lot of those findings and coming up with our own insights as well. So Andrew, why don't you go from here?
Yeah. Obviously, the market really liked this news. Bitcoin immediately was up, I think, 5% within 10, 15 minutes. And then just actually has just been continuing to go up since. It's still sort of making, new weekly highs, just hit over 28,000, which is pretty interesting because for someone who sort of lives on crypto Twitter like myself, the sentiment has been incredibly bad for weeks, if not months. There's been a lot of "it's so over," put it that way, sentiment on the timeline. And so it's funny that obviously crypto Twitter was completely wrong. And what's also really funny about this is that this is something that people have been talking about for a long, long time. There's some initial rumors that this would maybe come out last week, but yeah. Anyways, I think so. First of all, this isn't actually the Bitcoin approval itself. Obviously, ETF approval. That's still expected a minimum of 45 days away, and I'm seeing estimates more likely. I think the SEC could keep delaying for another up to 6 months if they were to. That's kind of like the what I'm seeing is like the estimate of when this ETF will actually get approved. So that still puts us for roughly March, which is pretty funny because it also lines up perfectly with the Bitcoin halvening, which is expected in sort of April, and also the sort of projected end of the rate tightening cycle. So it's kind of a crazy confluence of three massive bullish catalysts that are now kind of all perfectly scheduled for 6 months from now. And yeah, so I'm pretty excited. I still think there's going to be some choppiness for the next kind of 3 to 6 months, which is sort of has been my base case for the last 3 to 6 months. But I think everything's shaping up really nicely for a very, very strong 2024. I mean, I know we're going to get into like the Genesis deal as well, but there's also some spillover effects that are going to come from this as well. Very bullish for, off the top of my head, very bullish for potential Ethereum ETFs, potential Litecoin ETFs. So there's going to be a lot of really good spillover effects from this news. I'm curious, 9 Point obviously. And I would say Canada more broadly has sort of led the way with Bitcoin ETFs, for years now. I'm curious, what's your take, I guess, from where you stand?
I have so many takes. So first of all, My understanding from the court ruling and some legal analysts who've actually dug into it, and understand this stuff better than I do, is that the court, stopped short of actually like granting an ETF status to the Grayscale Bitcoin Trust. They basically said that all of the SEC's arguments as to why Grayscale should not be allowed to turn it into an ETF were not valid. Like they were without merit. Now, apparently, the SEC could come up with some other reasons, but they're sort of running out of realistic reasons as to why they'd want to prevent this from happening. So there are a lot of people now who believe that this will happen in that 6-month time frame that you've described, and that is reflected in the discount to NAV, which is the most like obvious metric that we can use to determine how the market is pricing in the probability of this. Now, it's interesting you said people have been talking about this for a while. It's true, they have. And it hasn't really all been talk. Like for whatever reason, like the progress in this court case and the other announcements around the other ETF filings from BlackRock have served Grayscale's trust well in terms of its pricing relative to NAV. So in January, the lowest point I see on the chart is December 13th of last year, of almost 50%, 48.9% discount to NAV, which is crazy. That was like you could buy $1 of Bitcoin for 50 cents if you felt at some point that there was going to be a chance that you could redeem at NAV. And the discount to NAV was very choppy. It got a little bit tighter over time, blew out again to 44% in June of this year, but has been really narrowing quite dramatically since then. Yes, last week you did mention that there was hope that it would come about. And as a result, the discount went up to 24% before dropping down to 26%. I don't know, I'd have to do the math, but basically Bitcoin's up 7.5% right now. GBTC is up 17.5%. So that discount is narrowed to closer to 10%. Now, some of that is going to be time value, right? So if it's September 1st or whatever, August 29th right now, but it doesn't get approved for 4 months, then there is still an opportunity cost to holding this thing, waiting for the conversion, right? Like if it's 6 months and you can earn 5% risk-free, then that's 2.5% right there, just for like the opportunity cost that you could have parked in literally anything else, right? But we are seeing this discount narrowing quite materially. And I think, if things are going in this direction, then it should continue to narrow as a result. So that's sort of take number one. Take number two is that this decision kind of reminds me of what happened in Ontario in Canada way back in 2020. So before even 9Point got involved in this space, there was a company called 3iQ. There still is a company called 3iQ that basically filed to get a closed-end fund that held Bitcoin listed on the Toronto Stock Exchange. And the OSC staff continued to come up with reasons as to why that was not a good idea. And so finally, 3iQ took their case not to court, but to the actual commission themselves. So the Ontario Securities Commission is made up of, volunteers, people who have been in the industry, in the capital markets industry or the legal profession for, many, many years. And the OSC at the time kind of categorically said, the 3iQ case seems fine and this should be approved. And so it got approved. And it wasn't long after that they were able to get an Ethereum trust approved. And then it wasn't long after that, and I'm talking like, under 6 months, that we got a Bitcoin ETF and then an Ethereum ETF. So what's interesting about this is like right now, the Grayscale Ethereum trust trades at a prior to this, 34%, and that's narrowed a lot, but way wider. But if you sort of follow the Canadian logic of this, there's no reason to believe that if a Bitcoin ETF gets approved, then an Ethereum ETF won't be far behind it. And I'll add one more thing, which is a bit of market structure issue that people don't totally understand. The reason why the regulators are comfortable with a Bitcoin ETF and an Ethereum ETF, among many other reasons, but one of the reasons is that there's a regulated futures market, which means that market makers who can create and redeem units every day can hedge their underlying commodity exposure, their underlying risk to the asset. And they can do so in a regulated market. There is not a futures market for Litecoin, Binance Coin, or any of these other coins. There may be, perps, and that might be a huge part of the overall volume of crypto, which we've talked about. But from a regulated market, it's Bitcoin and Ethereum. So, history doesn't repeat, but it rhymes. Somehow this feels very similar to the Canadian experience. And, I don't know what it means in terms of flows and how it's going to impact the price of Bitcoin. But, that Bitcoin ETF, the first one to launch was the Purpose Bitcoin ETF. When it launched, was the largest ETF launch in Canadian history and gathered like $1 billion in a week, which, in Canada, the rule of thumb is sort of 1/10 or 1/15 of the size. So I don't know if that means that there will be $10 to $15 billion of new incremental buying demand from Bitcoin, from more mainstream buyers, but it's going to be material. Like history has told us that it will be material. So that's another take. And then my final take on this is everyone's wondering, what does this mean for DCG? And this is a good segue to your discussion about Genesis. But one of the, we've had Ryan Selkis on the show, and he, has a pretty thoughtful take on this, which is basically that, right now, Grayscale is kind of this golden goose for digital currency group. It generates a lot of fee revenue for them. And if they convert to an ETF, that means there will be other ETFs in the market. And when that happens, they're going to have to lower their fees. And so their fees are going to go from 2% to something lower than that. And then the second thing that's going to happen is that there are going to be redemptions. So people are going to buy the trust units today with the expectation of redeeming those units at NAV when it converts to an ETF. And that's something that's going to drain assets from the fund. Both of those are totally valid comments. I just happen to disagree with them in this one key sense. If this ETF gets approved, Grayscale is going to start on third base when everyone else is just starting, stepping up to the plate. And the amount of assets they're going to be able to gather as a result of this is going to be so significant that it will probably offset the compression to fees or any redemptions that you might see from arbitrageurs, especially to your point, if that happens to occur in the exact same market conditions where the halvening is happening and where the market is turning from a rate hiking sort of expectation to a rate cutting expectation. I think it's going to be a huge tailwind for asset gathering. And I think this can only be viewed really as a positive for Grayscale at this point. All right, that's 3 takes.
Yeah, that's actually even 4 takes. That's actually really interesting. I thought this would actually be quite bad for Grayscale, but I see what you're saying. Their margin will go down, but the overall pie will increase so substantially. At least that's the theory.
Yeah.
That they should more than make up for it in volume, which is actually a pretty interesting. I sort of maybe disagree in the sense that I guess liquidity does beget liquidity, but at the end of the day, is your institutional fund manager going to buy a Grayscale Bitcoin ETF, or are they going to buy a BlackRock Bitcoin ETF?
Well, they're going to buy. It's an interesting question. They are going to buy. You're right that they may be impacted by the brand, but they're also going to have the fiduciary duty. They're going to buy the thing, the tightest spreads with the most, with the smallest sort of discount or premium to NAV, and the one that is supported by all the market makers. So, there are lots of not every ETF in the world, not every ETF in every asset class that's successful is BlackRock or Vanguard. Right. A lot of them are, but there's room for other, lesser known brands to succeed if they happen to have a huge head start and understand the asset class. And I think it's hard to argue that there's anyone in this space that understands this market as well as Grayscale does. So, I'm open to this point of view that as a result of, the increased competition, there'll be fee compression and so forth. But I just can't help but feel like, this is the thing that's going to make the market much bigger for everyone. And why wouldn't the leader be the one that benefits the most? That's my take. Yeah,
that makes sense. I think it is interesting too, because it's going to be a different subscription redemption process for this than compared to traditional. I wonder how that's going to work because how ETFs work. There's a subscription redemption process, and that's how you keep the ETFs in line with the underlying. If the price of the ETF gets out of whack, you buy the underlying and redeem it for the ETF, and then you sell that on the market. Typically, you actually go short the ETF beforehand to close the discrepancy. I actually spent some time on the ETF desk at BMO before getting into crypto, so I was the grunt in charge of the subscription redemptions. So I wonder how that's going to work with Bitcoin, because have to think about that, because I don't think, I mean, I don't see BMO or any of these banks buying Bitcoin on the spot market to like keep these ETFs in line, or for whoever's trading this. So I'm curious to see how the ETFs are going to work on the back end, because with the futures based ETFs, it was much cleaner, because they could just use futures. The underlying was futures. So I am very curious to see how that, like, the back end of this is going to work.
Well, you don't have to guess. I mean, there's proof of this in the market. Like, we've had spot Bitcoin ETFs in Canada for 2 years. And all a market maker needs to do is hedge the underlying risk, and then they take a fee in the form of like the spread between what the units are created at and what they're buying the underlying at. Now, a lot of market makers are not banks; they're also like crypto asset market makers. And then the final part is that it's the manager themselves that's actually buying and custodying the crypto, right? Like, the actual crypto assets are held in a third-party custodian. I'm wondering, well, I don't know who Grayscale is using. I know that with BlackRock's filing, it was Coinbase. But those assets, the actual coins, are held in trust by a third-party arm's length custodian, basically.
Yeah, I think Coinbase is actually the huge winner of this. Which is interesting, because you would probably think Coinbase is a loser in this, just in the sense that theoretically this could take away spot volume from their exchange and drive it to the traditional financial markets in terms of ETF trading volume. But as you said, and as I suspect, Coinbase will capture the majority of the sort of custody share, as well as like trading share that comes from this from Bitcoin ETF. From Bitcoin ETFs. So I mean, I just think it just makes Coinbase just that much stronger. I just think it's incredibly bullish for the Coinbase, the stock itself. I mean, I think it's just a huge win for crypto. I think one thing that's really interesting too is that this trade, just to kind of go back a second, what you were referencing, where you buy the Grayscale trust and then short spot and then try to capture that spread. That's historically has been a widowmaker in crypto for tons of funds, most notably Three Arrows Capital, who bought a ton of Grayscale Bitcoin trust essentially at a discount to fair value, and then shorted Bitcoin in the underlying spot markets. And then when Terra Luna happened, that discount just ballooned even more, which was a huge reason why the fund had to shut down entirely. And so it is funny, because it's historically been a widowmaker trade, but I mean, it finally, like you said, the discount has sort of collapsed quite a bit. I think it's down to like roughly 15% right now from a high of 50% at one point. And I know a lot of traditional sort of non-crypto hedge funds have been on this trade now over the last couple of months. And so, yeah, it's a big win for anyone who's been trading, I guess, doing kind of like a crypto traditional markets arb. So,
yeah, I mean, it's one of those things where like a lot of people have been buying this thing up just because they're like, well, I don't know about arbing or whatever, but if it's a 50% discount and it costs 2% per year to hold it, then I can hold it for 5 years, and I'm going to lose 10% in terms of fees. But if at any point in the next 5 years it gets approved, then I'm going to make it all back with the conversion and the convergence to NAV. And yeah, I mean, like, dumb money is sometimes right. And I think, that seems to be where we're headed. Okay, that's enough for that, because there's going to be a lot more coming out on this. And like, we're probably going to cover this topic next week. Andrew, anything else you wanted to talk about today?
I think the big thing over the last week has been the explosion in usage of this platform called Friend.Tech. So Friend.Tech is, I don't know how to explain it. It's sort of like a crossover between crypto Twitter and OnlyFans, and maybe Telegram, because it is sort of like a messaging platform. And it has been really exploded out of nowhere, and become the most successful decentralized social media platform that I know that's ever existed. I think it hit over 100,000 users in just 1 week alone. And essentially what it does is it allows creators, or I should say influencers, to launch their own tokens, or I should call them, they're now called keys. And essentially, what happens when you launch the token is it essentially trades on what's called a bonding curve. Don't really need to know too much about it, but essentially, it allows users to buy these coins, and it gives them access to different perks. And the perks are totally up to the creators themselves. For some creators, it's purely effectively a meme coin. There's no utility. For others, it gives them special access for whatever reason. And you're seeing a lot of people who have what are called paid groups. So people who share market insights, things like that, using this platform it's kind of like a new way to monetize their following. It's led to an explosion in speculation. And yeah, I mean, it's been kind of like the talk of the town for the last week. There was some, I guess one last thing I want to touch on. What's interesting is within a week, multiple competitors were cloned and launched just literally in the last couple of days itself. And Friend.Tech did a very interesting, very aggressive strategy where if you are a creator and you use one of these other platforms, they essentially cut all of your airdrop rewards, which is quite an aggressive way to try to lock in their creator ecosystem and prevent them from going to these other competitors.
And no kidding. Sort of like very un-Web3 thing to do.
Yeah,
in a way, it's like, wait, so you're saying I'm locked onto I'm stuck on the platform, and if I want to, try and create value or unlock value somewhere else, that you're going to penalize me or something like?
Yeah, I don't know. It's kind of a wild, historically what we've seen from DeFi platforms is when a new DeFi platform comes out, because everything's open source, a ton of competitors clone all of their code and launch a very similar version, and siphon off liquidity from sort of the original DeFi platform. That's driven down returns for DeFi quite a bit, just given how effectively non-defensible liquidity is. Liquidity within the context of social media is I would say a lot stickier, because it's essentially non-fungible. Creators are different from each other. And so if a creator stays on your platform and doesn't go to the other platform, that is, that's a big win, or it could be, essentially it's different than a DeFi platform where the supply side is fully commoditized. And so, it's been pretty interesting to see. I mean, it's very interesting. The thing is, we've seen this happen. We've seen this play out now multiple times. Most recently with a platform called Bitclout.
Yeah,
and it had a similar sort of 1 to 2 day spike, and then sort of just collapsed. And I don't even know if it's around anymore. So it's very interesting to see if Friend.Tech is going to be going down the same path. They did some things differently. For example, Bitclout allowed people to trade tokens of creators before creators had even joined the platform, which led to huge amount of controversy. And I think maybe even some threats of lawsuits. Friend.Tech, different. You have to create a platform before your token becomes live. But what's interesting is once you create a token, it's forever there. That you can't destroy it or do anything like that. So yeah, I mean, I think there's a lot of controversy. It seems like it's like our third go around with decentralized social media. This one's been the biggest launch yet. Too soon to tell if this is going to just be a fad or not. Seems like things are already starting to cool down. So, but yeah, it's interesting to see that happening at the same time that you see Twitter, getting approved for a crypto license in certain U.S. states. So it seems like there's a lot of convergence in social media towards crypto.
Interesting. Yeah, I mean, I'm all for these kinds of experiments. I often find that they're like hot for a moment, then they kind of fizzle out. And it makes you just wonder, like, some of these more social focused projects in Web3, what's going to give them staying power? And it's too early to tell. I think it's really interesting what you described. But already, as you pointed out, the volumes are down. So we'll see, I guess, is the best I can muster with this one. Maybe we should bring the founders on to talk about it and dig in a little bit deeper. We're going to find out who those people are and reach out to them. All right. Was there anything else, Andrew? You mentioned something about Genesis in our pre-call here for this. That affects DCG. Anything to add?
Yeah, I mean, mostly just like another very positive news story that came out, I think actually yesterday, or maybe actually it looks like it was, last night. Like you said, DCG reaches a deal with Genesis. CoinDesk is saying the recovery could be in the range of 65 to 90% of the total lost, which is actually, I think, definitely on the higher side from what analysts had been sort of expecting, or at least what the whisper number had been. So yeah, I mean, that's just like another very bullish sign. It's very interesting that, Digital Currency Group, this deal was made yesterday, right on the eve of this news coming out with Grayscale. Obviously, DCG and Grayscale are very, very connected. And so, yeah, I mean, it's just, that's just more, just another very bullish catalyst. And it looks like it's going to happen over the course of a couple of years, from what I can see. So yeah, just like another very bullish catalyst that should be sort of maturing at the same time that the launch of the Bitcoin ETF and the Bitcoin halving are going to be happening.
Yeah. All right. Well, listen, lots to keep our eye on here in the next little while. And I think the big thing is going to be, by next week, we'll probably have clarity on where things stand vis-a-vis this Grayscale ETF and whether or not the SEC chooses to come up with other reasons that it should be delayed, or if at some point we get clarity that it'll get approved. It'll certainly be an inflection point for the industry that we'll be following very closely here on the show. We got a couple of great guests teed up for the next little while that everyone should be keen to tune in, leading up to the end of September. We've got a couple of really great guests. So stay tuned. We have a great couple episodes in the next little while. That's it for this week's DeFi Decoded. I'm Alex. That was Andrew. We'll see you next time. Cheers.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.